the strength is 33. All right, it's reduced compared to yesterday. People have exams, or how is it?
Some
What
of
does?
them have tomorrow morning exams.
Tomorrow morning, right? All right. So not an issue. So nevertheless, let's get started with the session. 1.5 hours, 2 hours that we spend together. Let's ensure that we crack the balance portion which is available for us. All right. So next couple of hours that we spend together, let's give our 200% and let's get started. Am I audible, everyone?
Yes, sir. Yes,
Perfect.
yes,
So let's get started. The session again will comprise of quickly looking into those topics which are balance left over. And in today's session, we are going to spend half an hour on how to write your answers. All right. If not half an hour, at least 15-20 minutes, we are going to spend time on how to present your answers. That's primarily important. All right. So when will I do this discussion? Depending on how much energy you showed, based on that, I will take a call. So those of you who are coming, planning to attend only the last half an hour, last 1 hour, don't plan all of that. It's left to my discretion. Let's get started with the session. Good morning, everyone. Begin with balance topic. Yesterday's session.
Good evening.
Yesterday's session, I was able to cover, or rather, we were able to cover 8 chapters. In today's session, we are going to quickly look into the balance topic case as well. All right. So good to continue. Let me know if the screen is visible to everyone. Yes.
Yes, sir.
Yes, sir.
All right. So what else is? We are going to look into your third bucket, which is going to be 30 to 35%. Effectively, we are talking about 21 marks from here. All right. Then you have 15%, which is effectively, if you ask me, I would say 10 marks from LLP. All right. And thereafter, you have the PAP of all topics, minimum 12 marks going to be there from FEMA. All right. So quickly getting started. In today's session, we are going to cover approximately 40-45 marks. All right. So the first topic is your dividend. I hope the screen is visible to everyone. And let's get started with the session. The first section is a definition of the word dividend. Where is it defined? Section 2, clause 35 defines the word dividend. Dividend includes interim dividend. This does not answer the question. So therefore, what is dividend? Dividend is a percentage of your paid up capital, which is given to you out of the profits of the company. So who approves it? Who declares it? Where is the resolution? What kind of resolution? This depends on what kind of dividend is it. Is it a final dividend or is it interim dividend? If it is final dividend, then declared by the board of directors, approved by the members at the AGM, all right, bypassing an ordinary resolution, ordinary business. So therefore, it is coming as a portion of my ADDA points. Interim dividend. This is declared as well as approved by the board members, all right, or the board of directors. This happens at the board meeting, and the resolution is also the ordinary resolution amongst the board members itself. No confusion at all. This is about interim dividend. Clear? All right. Then we went on to understand what are the types of dividend. We have already discussed. Interim dividend is the dividend which is declared between 2 AGMs, while final dividend is the dividend which is declared at the end of the final financial year or out of the profits of the financial year, and this is declared at the AGM. Coming to the next point, dividend again can be classified based on shares. It can be equity shares or preference shares. If it is preference shares will always get a priority over equity shares. All right. Based on dividend rights, I can categorize equity shares into differential voting rights and uniform voting rights. Preference shares can again be of 2 types. One is cumulative preference shares, non-cumulative preference shares. Abhishek, cumulative preference shares are those shares wherein the dividend will get accumulated. If this year I was not able to pay, the next year I will pay. Not just for next year, even for this year, I will accumulate and give it to you. Non-cumulative, answer is very simple. If I have, I will give. If I don't have, I will not give. Simple as that. Understood, everyone? Then we went on to understand section 123, which talks about dividend. From where can I give the dividend? Dividend has to be given. Whatever I am discussing is only for annual dividend, all right, or final dividend. This is not applicable to interim dividend unless and until I specifically call out. There in the session, everyone?
Yes, sir.
When it comes to your final dividend, dividend can be out of the profits of the current year or it can be out of the profits of the preceding year as well. But before using your preceding year profits, there are certain conditions. Apart from that, if you're a company in which the central government or state government has given a guarantee that they will give you the dividend, then out of the sources which the central government or state government give will be the second source of dividend. Simple terms, I repeat, dividend is always out of the profits of that year after providing depreciation, and if there are any brought forward losses, then that has to be set off, and after that, if there is anything left over, that dividend can be utilized for the purpose of declaring dividend. However, in case if it is a government company or any scenario where the central government has given or state government has given a guarantee, then the second source is going to be out of that amount which has been guaranteed by the government. Now, in a scenario where should I transfer anything to the reserve? Answer is no. There is no mandatory requirement for transferring anything out of the reserves. Can I use previous year or free reserves for the purpose of dividend? Answer is in the current year if you do not have adequate profits. And if I want to utilize the profits out of the accumulated reserves, can I do so? Answer is yes, provided conditions are satisfied. What are the conditions? Your brought forward losses and current year losses, whatever losses are there, that has to be adjusted, and after that, whatever has been left over can be utilized. Second, the dividend rate shall not be more than the average dividend of the preceding 3 years. In case if you do not have dividend in any of the preceding 3 years, then this condition will not be applicable. The third thing is how much is the amount that you can withdraw? You cannot withdraw more than 1/10 of your paid up capital plus free reserves. Here, does free reserves include security premium?
No, sir.
Answer is categorically no, because securities premium cannot be used for anything other than my BP row seeing your DP with books. All right. And today's session itself, we discussed this. Those of you who weren't there. The next thing is current year losses, whatever is there, that has to be adjusted out of this amount which you have incurred, all right, which you have kept aside. And the last thing, after declaring the dividend, the reserve should not fall below 15% of your paid up capital as per the latest audited financials. These 5 conditions have to be satisfied if you want to declare dividend out of the brought forward losses, or rather brought forward reserves. Here, everyone understood? Important topic from examination perspective. Next, when we come to declaration of dividend, can I use capital reserve for the purpose of declaring dividend? The answer is absolutely no. It cannot be used for anything. If I have losses in my previous years, can I still declare dividend out of the current year profits? Answer is no. You have to set off, and after that, if anything is left over, can be utilized for the purpose of declaring dividend. Can I declare dividend out of the revaluation gain? Answer is no. It's a notional gain which does not even exist. Then I will not give you the permission to go ahead and declare dividend out of it. Clear, everyone? All right. Then we saw the concept of interim dividend. Interim dividend is declared by the board of directors between 2 AGM. From where is it declared? It is declared out of the surplus in the P&L account or out of the profits of the current financial year itself. If in the current quarter I have, or in the current period I have losses, can I still go ahead and declare dividend? Losses immediately preceding quarter, how much was the reserve? If there were profit out of that, then up to that profit available, you can go ahead and declare dividend. Interim dividend is what we are talking about. We went on to understand other points. Whenever a dividend is declared, you have to ensure that whatever amount has been decided, that has to be sent to a separate bank account within 5 days from the date of declaration. No dividend shall be paid unless and until you're a registered shareholder. There is no prohibition on capitalization of the profits or reserves, which will be fully paid up bonus shares. Payment can be made in check, or it can be made in electronic form, or it can be made in warrants. A company which fails to comply with the provisions of section 73 and 74, which is dealing with your deposits, all right? And as long as this failure continues, dividend cannot be declared, all right? You cannot declare dividend if you have not complied with section 73 and 74. We went on to understand difference between final dividend and interim dividend, important topic from examination. When it comes to the sources, I want you to remember the most important thing is current year profits and brought forward reserves can be considered for the purpose of final dividend, but interim dividend is always out of the current year profits itself. Unpaid dividend account section 124. If you have transferred the amount within 5 days, it goes to a scheduled bank account. And if you were not able to make the payment within 30 days from the date of declaration, I will give you 7 days after the expiry of 30th day to transfer the amount to an unpaid dividend account. This information has to be put up on the website of the company. If you default in transferring, there is an interest of 12% per annum. Any person who wants to go ahead and withdraw this money from this account has to make an application. In case for 7 years your amount is lying in this unpaid dividend account, then this amount will be transferred to another strict dad's pocket called as IPF account. For 7 consecutive years, if your dividend is getting transferred from unpaid dividend account to IPF, then not just your dividend, after 7 years, even your shares will be transferred. All right. However, if I want to claim the share back, I have to make an application to IEPF and it can be done. Simple chart on screen. Pay attention. Dividend declared. I have 5 days to transfer it to a scheduled bank account. Is the screen visible to everyone? Yes.
Yes, sir. Yes,
So
sir.
I have 5 days to transfer the amount to a scheduled bank account. Once it is declared, within 7 days, I have to make the payment. If the payment is not being made, then I have to go ahead and transfer it to another account called as unpaid dividend account. If this is also not, and along with this, you have to ensure that within 90 days, the transactions are listed on your website or a website of the government approved. Very important, for 7 years, if the amount is lying in your unpaid account, then your dividend amount will be transferred to unpaid or IPF account. Very, very critical. If for 7 years this continues, every year your amount is getting transferred from unpaid dividend account to IPF, then not just your dividend, even the shares will get transferred. We see the concept of IPF. From where does this amount, or what is the role of IPF? IPF plays a significant role in protection of the dividend and funds of the shareholders. Sleepy?
No, sir.
No, sir.
No, sir.
Rights to keep the shares and dividend in abeyance. What is this? Section 126 says, in case if you're registered, all right, if your shares are not registered, and if you want to keep the right in abeyance, then company has all the rights to keep this right of dividend and right share and bonus shares in abeyance until and unless it is decided who is the going person or who is the person who is supposed to receive this amount. All right. In case if there is anything to be transferred, then this amount can also be transferred to an unpaid dividend account. Very important. How long will I keep it? Unless a registered shareholder gives a confirmation to receive the dividend. This is keeping the amount in abeyance without giving it to anyone. Next point is section 127. If you contravene the provisions of whatever we've discussed, then company will be liable with an interest of 18% in case if you've declared and not paid within 30 days. An officer will be liable with an imprisonment of up to 2 years and fine of 1,000 rupees per day. Contravention of section 127 will not be applicable if you can prove that it is because of operation of law, wrong direction given, disputing regarding the right to receive dividend lawfully adjusted against the sum due, or any other equitable reasons. This is about the whole chapter called dividend. Good to continue? Everyone there in the session?
Yes, sir.
Yes, sir.
Yes.
Sir.
So I hope each one of you have got a quick glimpse of the chapter called dividend. Now let's go ahead with the second chapter. There in the session, everyone? Yes?
Yes,
Yes, sir.
Yes, sir.
Can we go ahead with accounts of the company? Yes, everyone there? So when it comes to accounts of company, I want you to ensure that you read this chapter when you're absolutely fresh. Accounts of companies, the problem is, sir, we are 24 hours, we are not fresh. That is our problem. Don't read, don't write the exam. Simple as that. All right. Now coming back to the question, this chapter is important because questions will be lifted in auditing from here. Questions will come again. There are possibilities. Not always your accounts paper will have 100 marks of theory. No, there are possibilities that they can ask theoretical questions in accounting as well. I hope your accounting faculty has informed you regarding this. All right. Now coming back to the point, this chapter of accounts and accounts of company is significantly important because of this coverage. All right. I hope the screen is visible to everyone. Let's get started with the syllabus. Visible?
No, sir.
No, sir.
Now,
No, sir. Yes.
Yes, sir. Yes.
the first topic that we are going to discuss is section 128, books of account, etc., to be kept by the company. It is not an option. Every company has to maintain their books of account satisfying the requirements of section 128, subsection 1, which talks about not just the books of account, but also relevant books and papers. For how many years and what is to be done? Very important. It has to be giving a true and fair view. It should be about the branch offices also to be consolidated. Accrual basis to be used and double entry system has to be used for accounting. Section 128, subsection 1, talking about books of account to be maintained. We saw what is the definition of the word section books of account, and we saw what is the definition of the words books and papers. Books of account is all those records which are including those which are pertaining to the receipt and expenditure, sales and purchase, assets and liabilities, and items of cost, if required to be maintained under section 148. When we were discussing section 148, I had told you cost records are not applicable to everyone. It is applicable only if the conditions mentioned there are satisfied. All right. So therefore, clause 4 makes it clear as may be prescribed under section 148 in the case of company which belongs to that class which has been specified. What do you mean by books and papers? Books and papers is a wider definition which includes books and accounts. And it includes all your vouchers, writing, minutes of meeting, all the documents which have to be maintained. Can I maintain this in electronic form? Answer is yes, you can go ahead and maintain it in electronic form. I want to maintain the books of account at any other place in India, then the board of directors have to decide this, and within 7 days, a notice has to be given to the registrar. Make note, everyone important. Can I keep my members' registers elsewhere? Answer is yes, provided 1/10 of the member reside there and a special resolution is passed. That is registers. This is about your books of account. Can I keep it somewhere else? Answer is yes, provided board of directors have decided and within 7 days, you have informed your registrar of companies. Then we went on to understand how will you maintain your books of account in electronic form. It can be maintained. It should be accessible in India, retained in the format in which it was originally generated. Branch offices can go ahead and maintain the original and it should not be altered. It should be in a legible form and the server should be located in India. Very, very important. Apart from that, you have to ensure that you intimate the registrar 3 things: who is the service provider, what is the IP address, location of the service provider, and where the books are maintained in the cloud. Such address of the service provider has to be given to the registrar if you're maintaining books of account in electronic form. Sleepy?
No, sir. No, sir.
Very important, if you're maintaining your books of account in an accounting software, all right, if you're using accounting software, then you have to ensure 2 features are enabled. First one is edit log. Second one is audit trail, all right, which will tell us what has happened throughout the entire history of the transaction will be pulled out from this audit trail. Clear, everyone? Understood? And this has to be maintained regularly. Do I have the concept of branch office? Answer is yes. Branch offices also have to maintain their books of account. All right. And summary of this has to be given to the head office, which is going to consolidate it finally. Section 128, subsection 3 and subsection 4, very, very important. Usually questions are asked from here. What is section 128, subsection 3 saying? In case if any director wants to go ahead and review the books of account or inspect the books of account, he can do so only during business hours. But however, if he wants to do it for the subsidiary also, he can, provided board resolution has been passed authorizing him to do this. Subsection 4 is saying whoever are the employees of the company, they have to give the assistance to the director whenever he wants to inspect the books. Preservation of books, section 128, subsection 5 says books of account have to be preserved for 8 financial years. Then we went on to understand section 128, subsection 6. Slap yourself quickly in case if you were not ready to correct me.
8 immediate preceding financial.
You're listening to somebody yelling at the top of his voice and somebody is narrating some Panchatantra story and you guys are enjoying it. Are you able to understand what I'm talking? Everyone?
Yes, sir. Yes, sir.
Yes, sir.
I am confident that I am making sense to each one of you because you've seen this entire slide multiple times. That is the only confidence with which I'm using the presentation and not the revision material, so that you can gather the information quickly. That's the whole objective. Are you able to recall whatever we've discussed in the past?
Yes.
Yes, sir.
So going back to the topic, section 128, subsection 6 talks about who is the person responsible for maintaining the books of account. It is going to be the managing director. It is going to be the whole-time director in charge in case of a finance. CFO is going to be responsible and any other person who has been given the in charge. All right. But that person also has to be of the company itself. It can't be an outsider. We went on to understand the penalty provision in case if you don't comply with the provisions of this. Section 129, subsection 1 talks about, very, very important, it states 129, subsection 1 talks about financial statements, these are standalone financial statements that we are talking about. It should give a true and fair view, very important, and it should comply with the accounting standards which have been prescribed under section 133. In case if you're a banking company, and if you're an insurance company or a company which is governed by any other special act, and if you're following whatever disclosure has to be made there, whatever accounting standards and accounting policies which are governing that law, if you're following that, it's absolutely fine. I cannot say that it is not giving a true and fair view just because you're not following what is given in subsection 1. This is about your financial statements. Section 129 subsection 2 says every AGM I have to lay down the financial statements for the board, for the company to approve it. And this is a part of my adda points. Then we went on to understand subsection 3, which talks about consolidated financial statements. Very, very important. Consolidated financial statements comes into picture in case if I have a subsidiary or a joint venture. Very important, huh? Very important. If I have an associate company, or listen to me very carefully, if I have a subsidiary or a joint venture, all of those are covered within the definition of subsidiary for the purpose of section 129 subsection 3. I have to prepare the consolidated financial statement of the company along with its subsidiaries. And in case if there are JVs, I have to include the JVs as well. Sir, is it going to substitute the standalone financial statement? Answer is no, it is going to be in addition to the standalone financial statement. Then we went on to understand subsection 3, which also says, in case if you have subsidiaries, I want you to give, along with your consolidated financial statement, salient features of all your subsidiaries. Important aspect is exemption from preparing CFS. Very, very critical topic from examination perspective. In case if you're a wholly owned subsidiary or a partly owned subsidiary and you're intimated and all your members have intimated in writing that you do not object the company for not preparing consolidated financial statement, the company is neither listed nor in the process of listing, and the ultimate holding company is preparing CFS. Somebody in the group at least is preparing CFS. Then you as an intermediary, you don't have to prepare CFS. Not able to remember? Example that we are talking about, A is holding B, B is holding C. Now the question is, how many standalone financial statements? There would be 3. How many consolidated financial statements? Ideally 2. Ideally 2 consolidated financial statements. How? A is going to consolidate A, B, C. B is going to consolidate B as well as C. But how many such layers, in case if I have multiple layers, how many such consolidated financial statements will I prepare? I don't want to do that. Therefore, comes in the exemption. If you're a wholly owned subsidiary and somebody in the group is preparing consolidated financial statement, I am okay with it. You're not preparing it. Favorite examination question. Insist you to keep your cameras on. Shreyas there in the session. Section 129 yes, subsection 4 says, whatever law is applicable to a standalone financial statement, the same provision applies even to a consolidated financial statement. If you've not complied with accounting standard, is it fine? Yes, it is fine if you don't comply with accounting standard. But I want you to disclose in your financial statement 3 things. What is the deviation? What is the reason for the deviation? How much is the financial effect of this deviation? Favorite examination question in auditing. Kavana Limited has not followed accounting standard 9 for the purpose of revenue recognition since it is into infrastructure or whatever it is. All right. However, Kavana Limited in the financial statement has disclosed the fact that it has not followed the accounting standard, given the reason and also mentioned the financial effect. Can the auditor modify his opinion? The answer is no, he cannot give a modification. However, there can be an emphasis matter paragraph or it can be other matter paragraph as the case may be. Clear with the concept, everyone? Understood the point? All right. Yes. Next thing, section 129 subsection 6 can go ahead and exempt a few companies from, or few certain class of companies from provisions of section 129. If you do not follow the provisions of section 129, what is the punishment, which is penalty, which is coming under 129 subsection 7. 129A talks about periodical result. Last but one RTP had a question on this. What is a periodical result? It is not applicable to everyone. It is applicable to only certain unlisted companies where they have to prepare their financial statement on a periodical basis, get this approved by the board of directors, and an audit has to be conducted. This will be filed with the registrar within 30 days. There was a question only on 129A. It's a chiller topic, nothing high funda. We went on to understand section 134, which talks about authentication of the financials, or in simple terms, who's going to sign the financials. It can be done by the chairperson, it can be done by the executive director, it can be done by the CFO, it will be done by the CS if appointed. In case of a one-person company, it can be done only by that one director. Every financial statement or the auditor's report has to be given to every financial statement. Along with your financial statement, you have to ensure that you give consolidated financial statement if applicable, notes to account, auditor's report, and board report. What all is there in the board's report is something which is covered under section 134 subsection 3. All right. Notes have a complete breakup of what is to be disclosed. What is more important is, in case if you have any sort of report which is covering any qualification, reservation, or adverse remark, board of directors have to justify that in the board's report. If your auditor has qualified his opinion, the board of directors have to justify, give his explanation why there is an adverse remark in the auditor's report. Next point is director's responsibility statement. I would say this has to be there at the tip of your tongue. Section 134 talks about your director's statement. Section 134 subsection 5 talks about your director's statement, which says whatever annual accounts are there, that is in accordance with the applicable accounting standard. Accounting policies have been followed. Directors are ensuring that there is sufficient accounting records which are maintained for, or all the safeguards have been taken for safeguarding your assets and preventing and detecting frauds. Annual accounts are prepared on going concern basis. If you're a listed entity, you're having IFCs placed in place. All right. And there is sufficient mechanism to ensure compliance with all the applicable laws and systems are operating effectively. 6 clauses in your DRS. Director's responsibility statement. Clear, everyone? Understood? We saw who's going to sign the auditor board's report. The board's report has to be signed by its chairperson, and if he is authorized by the board. And where he is not so authorized, then it shall be signed by 2 directors, out of which one has to be the managing director. Penal provision in case if you don't follow the signatures. We went on to understand internal audit under section 138. Who can do the internal audit? It can be done by chartered accountant, it can be done by cost accountant, or it can be done by any other professional as may be decided by the board. To whom is it applicable? It is applicable to all the listed companies. It is applicable to all the unlisted companies, provided, listen to me very carefully, listed company blindly applicable, unlisted company ILCD to be tested. All right. What is ILCD? 200, 100, 50, 25. I stands for turnover or income, L stands for loans, C stands for capital, and D stands for deposits. In length, we have discussed this earlier. If it is a public company, all right, unlisted public company, then ILCD has to be checked. If it is a private company, just stop at I and L. You don't have to check CD. Clear, everyone? Understood? All right. This is on your applicability of internal audit. Then we went on to understand the whole concept of CSR under section 135. Very, very, very important topic. Highlight this as one of the most important topics from examination perspective, because post-COVID, there have been couple of amendments in this section. It's not in the latest amendments. All right. Post-COVID, there have been severe changes, and in your revision material, I have highlighted all the amendments. So don't worry about it. Don't cross-verify the fact. I'm telling you, I have prepared the revision material. Coming back to the question, CSR unutilized fund chart. If you do not utilize the CSR amount, what has been decided? All right. How much is it? 2%. All right. 2% has to be contributed. Do you remember? We have discussed this.
Yes, sir.
Yes, sir.
Yes, sir.
Can you? Yes. So
Yes.
in case if I was not able to utilize the amount which has been agreed upon, check what kind of project it is. Is it an ongoing project, or if it is not an ongoing project? Let's simplify our life. If it is not an ongoing project, shut up and transfer it to Schedule 7 fund within 6 months from the end of the financial year in which you were supposed to contribute. If it is an ongoing project, then I will give you time. Please transfer it to another account called as UCSR account, or also called as unspent corporate social responsibility account. Sleepy?
No, sir.
This has to happen within 30 days from the end of the financial year. Now, if I was not able to spend this amount also for 3 years, then law says within 30 days from the end of 3 years, you also please transfer it to Slick Dad's pocket, which is Schedule 7 fund. Clear, everyone? All right. Please expect MCQ from this topic. Expect MCQ from this topic. Reopening of accounts on court or tribunal's order. Court or tribunal can go ahead and ask you to reopen your books of account if there is any instate, or if there is any visibility of frauds, or if there is any indications that you have defrauded the creditors. All right. But this has to happen only if the court has given the order. How many years can the reopening be carried out? Quick.
8 years.
8 years.
Please note, reopening can be carried out for 8 financial years. Beyond this, not possible, because anyway, I'm not required to maintain books of account itself. Next thing is voluntary revision of the financial statement. If I myself find that there are issues in the financial statement or something has to be reinstated, then the board of directors can go ahead and voluntarily revise the financial statement. But how long or how many years can they do this? All right. It can be done
Three
for 8 years.
financial.
For 8 years.
Three
financial
See, there in the session, all right, this itself is a major difference between 130 and 131. All right. Here, the maximum number of years that you can go ahead and reopen or voluntarily revise is going to be only 3 years. Section 132 talks about your NFRA. NFRA is one of the important topics. All right. I have covered this in your audit and auditors in the revision material. All right. At the same time, I am touching upon this law, this whole possibility of question around NFRA from here. What is this and who constitutes this? Central government is going to constitute NFRA. For what? For the purpose of all the matters which are relating to accounting and auditing. What is their role? All right. NFRA will make recommendations to the central government, monitor and enforce the compliances, oversee the quality of services, and perform all those other functions as may be prescribed for the purpose of the first 3. All right. NFRA is led by a chairperson who is an expert in accounting, auditing, finance, or law. Apart from this, I can have another 15 members who shall be a part-time or full-time members in my NFRA. Can they do anything? Answer is yes, they can go ahead and they have the power to investigate. They have all those powers which are listed in the civil code. All right. They can go ahead and in case if there is any misconduct, they can impose penalty. They can debar the member. Any person who is aggrieved by the order of NFRA can go ahead and file an appeal before the appellate tribunal. Section 133 is talking about all those government or accounting standards which the central government is going to prescribe, but that is only after consultation with NFRA. Next is right to the copies of audited financial statements. Section 136 says all the members have a right to the audited financial statement, and it is the duty of the board of directors to ensure that copies of financial statements are provided. Sir, sorry, sir, we forgot. Then there is a penalty which is attached to this, where the board of directors and office will be and the company will be penalized. The next thing is section 137, which talks about whatever financial statements are there that has to be filed with the registrar on a periodic basis. With this, we come to an end of your second chapter called Accounts of Company. Clear, everyone? Yes?
Yes, sir.
Yes, sir.
Yes, sir.
Took an hour. We took an hour, but if you realize or not, I'm not sure how many of you realize, easily 25 marks we have already covered. All right, easily 25 marks we have already covered. Can we continue? 20 marks per minimum. Can we continue? Everyone there in the session, or shall we quickly take a small detour and go to LLP and come back? Can we quickly look into LLP so that you get some breather? Can I begin?
Yes, sir.
Yes,
Sir.
Let me know if the screen is visible to everyone. Visible?
Yes.
yes, sir.
Limited liability partnership. All right. Important topic. This is again a simplest way of calling a Bhelpuri or a Chitrana. Why? Because they've taken the advantages of all the companies and the partnership and they brought it into a new form of entity called as LLP. One of you quickly read the features. Quick.
What is
LLP.
LLP, new form of legal business entity with limited liability. Alternative corporate business vehicle allows the partners the flexibility of organizing their internal structure. LLP itself will be liable for the full extent of its assets. Liability of the partners will be limited.
All right. In simple terms, we are talking about all those advantages which are there in companies as well as partnership firm. Those are brought in here to make it simpler. All right. Do you think this will be asked in examination? My thought, no, they will not ask such simple questions. What are the kind of questions that you can expect? Let's start dealing with those. This is applicable to whole of India. It is having 81 sections and 4 schedules. First schedule deals with your rights and duties. Second schedule deals with your conversion of firm into LLP. Third one talks about conversion of private company into LLP. Fourth one is talking about conversion of public company into LLP. All right. Very, very important.
Unlisted public company.
Am I audible, everyone there in the session?
Yes.
All right.
Yes.
Very important aspect that you will have to understand is 2021, there has been recent amendment. All right. Again, post-COVID, there have been an amendment. There has been an amendment in LLP. I want you to remember, just like small company as a definition, wherein you saw small company is a private company which satisfies 2 conditions. The first one, wherein it is having a paid up capital of 4 crores and turnover of 40 crores and is used between. It should not be a holding company. It should not be a subsidiary company. It should not be a company governed by a special act. It should not be a company which is any other body corporate which is governed by a special act. All right. And very, very important, similar definition is coming in small LLP as well. Now, what is the small LLP? Small LLP is one wherein contribution, instead of capital, we are using the contribution does not exceed 25 lakhs. Turnover as per the statement of accounts and solvency for the preceding year does not exceed 40 lakhs. All right. Such other conditions as may be prescribed. Now, very, very critical, they've used the word and between. So both these conditions have to be satisfied. Currently, the limit is 25 lakhs and 40 lakhs. However, in future, can it be increased? Answer is yes. How much? Up to 5 crores and 50 crores as the case may be. What exactly is financial year definition here? If you see the definition, before that, body corporate. What is a body corporate? Body corporate means LLPs, which are incorporated under this act outside India, any other company which is incorporated outside India. But it shall not include sole corporation, cooperative society, or any other body corporate which is neither governed by Companies Act nor by LLP. Such companies will not be covered within the body corporate definition. I want you to note the definition of body corporate exceptions. There can be a question here. There can be a question here. Financial year definition. Under the Companies Act, if you recall, financial year means a year of or a period of 12 months which is beginning after or which begins from or which ends on or before 31st March. All right. So it's obvious it has to begin from April 1st itself. But when it comes to the financial year definition under your LLP, it says it means a period which is starting from 1st April to 31st March of the following year. However, if you're incorporated on or after 30th September, the financial year ending is not going to be this March. It will rather be the next March. In case of company, there is a slight twist. There's a small twist. If I'm incorporated on or after 1st January, then my financial year is not going to be the immediate financial March. It will be the next March. But when it comes to LLP, instead of 1st January, the cutoff date is 30th September. I want you to open your books and quickly write down this. Quick. Write down in your own language. Quick. There in the session?
Yes.
Open your books, write down. Yes. Financial year definition under Companies Act 2013. Quick. Financial year definition under Companies Act 2013 is different from financial year definition under LLP Act 2008 in following terms. What are the changes? What are the differences? First one. Period for a new LLP which is incorporated. Period for a new LLP which is incorporated on or after 30th September of a year. Period for a new LLP which is incorporated on or after. What is it? After or on or after?
After.
Everybody there in the session. Write down. After 30th September of the financial year, comma. The year ending would be not the immediate March, but the March of the following year. Next point. Next point. In case of a company, which is incorporated after 1st Jan.
On or after.
On or after.
Able to appreciate everyone? All right. In case of a company incorporated on or after 1st January of a year, the financial year would be ending not in the immediate March, comma, but in the subsequent but in the March of the following year. Clear, everyone? Understood? Can I continue? Yes. Now going back to the chapter, I hope the screen is visible to everyone. Characteristics of company.
Yes.
All right. Simple pointers. I might not want to spend too much time here. Foreign LLPs as a concept. Just like how you have foreign companies, foreign LLPs are those which are incorporated, formed or registered outside India, but has a place of business in India. A foreign LLP can become a partner in an Indian LLP. This can become an MCQ in your examination. Foreign LLP can become a partner in an Indian LLP. Nothing hyphened up. Quickly read the advantages.
Is organized and operates on the basis of an agreement, provides flexibility without imposing detailed legal and procedural requirements, easy to form, all partners enjoy limited liability, flexible capital structure, easy to dissolve.
Done. All right. Nothing hyphened here. Incorporation process. Now sit straight and listen to me. The first thing that you're going to do is decide the partners and the designated partners. Once you have decided that, you're going to obtain the DPIN. What is DPIN? Designated Partners Identification Number. And you're going to obtain the DSC. After all of this, you are going to check whether the name of the availability of the LLP's name. All right. For this, you're going to give 6 options. Once this is indicated and once the name is available, you can start drafting your LLP agreement. You're going to electronically file your documents. And once you are incorporated, you will get something called as LLPIN. All right, which is nothing but your limited liability partnership identification number. Once you are incorporated, what are the benefits available to you? You can sue and be sued. You can go ahead and acquire properties. You can have a common seal if you require, and do all such other acts which any other body corporate could have done legally. Very, very important point. Whenever there is a cessation, now coming to the point on partnerships or partners in an LLP. Whenever there is a change, all right, you have to, or whenever you want to move out of the partnership, you have to give a notice in writing not less than 30 days to all the other partners. Second thing, where a partner will move out of the firm could be operation of law. The third thing, once you have ceased to be a partner, he shall continue to be a partner until and unless a notice is given to the registrar. That means, just like in case of outgoing partners, you have to give a notice to the third parties. Here you have to give the notice to your daddy. Liable for all the obligations which is incurred while you were a partner. Once you are, as long as a partner, before you cease to continue, you will be entitled to the profits. After you move out, there will be no question of sharing any profits. Partners, next important concern would be designated partners, or who are designated partners. Important topic again. Every LLP shall have 2 designated partners who are individuals, and at least one of them.
2.
That's what I said, right?
No, sir. 2 is.
I'm sorry. All right. So every LLP shall have at least 2 designated partners, out of whom at least one of them shall be a resident in India. Very, very critical point. All right. Every LLP should have, very, very important, every LLP should have at least 2 designated partners. Out of these 2 designated partners, at least one should be a resident in India. Now, who is a person resident in India? A person who's resided in India for a period of not less than 182 days during the immediately preceding 1 year. In case if all the partners in an LLP are body corporate, then what will they do? They will go ahead and appoint nominees who will act as a designated partner. All right. So such nominees have to ensure that they satisfy the condition. Next thing is registered office of an LLP and changes therein. Should I have a registered office? Answer is 100% yes, you should have a registered office as an LLP. So that whatever documents are sent, in case if it is sent to the LLP, it is as good as sent to the entire firm. Whenever the LLP wants to go ahead and change its registered office, it has to inform the registrar and file the respective forms. If you default in any of the compliances of this section, then there is a penalty. Next thing is on name of the LLP. The LLP has to ensure that it is suffixing its name with LLP or limited liability partnership. No LLP should have any name which is undesirable or identical to any other entity, any other company which has a registered trademark or any other registered trademark of any other person under the Trademarks Act 1999. If you still go ahead and want to reserve your name, and for this, why is reservation important? Because as a part of incorporation, I've told you, sit straight. As a part of your incorporation, I've told you, you have to ensure that your names are reserved first. So what will I do? I am going to propose my names to the LLP or whatever name I want to incorporate to the registrar. Once the registrar is satisfied, then he is going to reserve my name for how long? For 3 months from the date of intimation by the registrar. For 3 months, it will be reserved. In case if your name is common to that of any other LLP or if it is resembling with any other registered trademark, then an application can be made to the central government to give you direction to change your name. All right. Once this application is made, you have to go ahead and change your name within 3 months. I repeat, similar topic which we have discussed already under Companies Act as well. Your name cannot resemble any other LLP or any other company. Your name cannot resemble a registered trademark. If it is resembling, then an application can be made, and based on the direction, within 3 months, you are supposed to change your name. But when can an application be made by the registered proprietor of the trademark? Not after 3 years. It has to be done within 3 years from the date of incorporation. Whose date of incorporation? Mine or the registered trademark? LLP's registration in simple term. All right, clear? Same topic we have seen under Companies Act. Same topic we have seen under Companies Act as well. Rectification, whatever we have discussed, all right. The rectification has to be carried out, and once the rectification is carried out, you are going to get a new certificate of incorporation, all right, which will be your proof of identity. When it comes to your liability of partners, all right, every partner is just an agent of the LLP. He is not an agent of the other partners, unlike partnership firm, where you're an agent of the firm as well as partners. Here, you're just an agent of the LLP. Second thing is liability of the LLP. LLP is not bound by anything which is done by the partner. If he has done it without authority, or if he has no authority or does not believe that he is a partner of the LLP. Second, the LLP is liable to the partner if the LL of an LLP is liable. If a partner of the LLP is liable to any other person for a wrongful act on his part in the course of the business. What is the meaning of this? If the partner has done something on behalf of the LLP for the purpose of the business, then LLP is definitely liable for it. All right. Very important, obligation of the LLP, whether arising from a contract or otherwise, will solely be the obligation of the LLP. What is the meaning of this? It is always the liability of the LLP. It cannot become the liability of the partners. That's the whole concept of limited liability. You don't have to sell your house, sell your kidney, bring in the money. All right. This is not required in case of LLP, unlike partnership firm. Extent of liability. Section 28 says partner is not personally liable for obligations of the firm. However, if he has done anything wrong, all right, on purpose, then he will be personally liable and he has to share all the losses if he has done something with a fraudulent intent. In detail, I'm going to talk about it. Partner by holding out. In case of partnership, it is also called as estoppel partner, but that concept is not there in LLP. We don't call them estoppel partner. What is this partner by holding out? Same example. you and I are partners in LLP. We are introducing Amitabh Bachchan as a partner of our firm, and Amitabh Bachchan is busy eating the food instead of denying that he's not a partner in our LLP. Tomorrow, if any third party has given any loans or has advanced any money to the LLP based on the fact that, or based on the understanding that Amitabh Bachchan is a partner in your LLP, then in that case, Amitabh Bachchan is liable to such third party. Clear, everyone? Read, one of you, quick.
Holding out, subsection 1, any person who by words, spoken or written or by conduct, represents himself or knowingly permits himself to be represented to be a partner in LLP is liable to any person who has on the faith of such person or representation given credit to the LLP, whether the person representing himself or represented to be the partner does or does not know the representation has reached the person so giving credit.
Simple as that. All right. Whether Amitabh Bachchan knows or not that this information has reached the third party, that is not my headache. Has the third party believed on this representation? Answer is yes. Is he liable? Answer is yes. Chinmay there? Can we continue? Next.
However, where any credit is received by the LLP as a result of such representation, the LLP shall, without prejudice to the liability of the person so representing himself or represented to be a partner, be liable to the extent of credit received by it or any financial benefit derived thereof.
Very important. What is this point saying? Now, just because Amitabh Bachchan is responsible, can the LLP say we will not pay, go collect it from Amitabh Bachchan?
No, sir.
What nonsense. That's exactly what is coming from the professor here. However, where the credit is received by the LLP will continue being liable to the extent of the credit which it has received. Nothing high funda. It's a simple topic. All right. In case if you are not able to pay, if the LLP is not able to pay, then you can question asking Amitabh Bachchan to be liable for it. All right. This is your partner by holding out. Unlimited liability. Read, one of you. Wherein you might have to sell your house, sell your kidney, sell yourself, bring in the liability, bring in the money. When? If it is unlimited liability. But will unlimited liability come in all the scenarios? Answer is no. Read quickly. One.
In case of fraud, in the event of an act carried out by a LLP or any of its partners with the intent to defraud creditors of the LLP or any other person or for any fraudulent purpose, the liability of the LLP and partners who acted with the intent to defraud creditors or for any fraudulent purpose shall be unlimited for all or any of the debts or other liabilities of the LLP.
When will this come into picture? Only if you want to defraud the creditors of the LLP, all right? Or if you want to carry out some fraud for a fraudulent purpose, then the liability is going to be unlimited. However, in such an act, go ahead.
However, in case any such act is carried out by a partner, the LLP is liable to the same extent as the partner unless it is established by the LLP that such act was without the knowledge or the authority of the LLP.
In simple terms, whatever the partner is doing, at the end of the day, he's doing it on behalf of the LLP. So LLP will be liable. Unless the LLP can prove that we didn't have an idea about it, so we are not responsible for it. Clear, everyone? Understood the point? All right. So this is about your unlimited liability. The last topic is on whistleblowing. Whistleblowing is where any person who is any employee or any partner is assisting the tribunal, all right, by giving certain useful information in a scenario where any investigation is going on about the LLP, about the partner, about the employee who has been convicted, then in such case, that partner or employee will have a reduced or waived penalty. Very important. No such partner or employee should be discharged or demoted or suspended because he has given such information. This is about the whole concept of whistleblowing. I've discussed this in length during our regular classes. All right. Next is statement of solvency. Nothing but giving the kundali of what you've done throughout the year. All right. Here you're going to talk about whether you are solvent or not. Within how many days should I file this? It has to be filed within 6 months from the end of the financial year. All right. For 6 months from when? From the said financial year. All right. You have to file this statement of accounts and solvency. And this has to be signed by your designated partner. Section 35 is talking about it. Next is about your annual return. Every LLP has to file its annual return within 60 days from the closure of the LLP. Two things that we are talking about. One, statement of solvency, all right, which is 6 months from the end of the financial year. Second, it is annual returns, which is 60 days from the end of the financial year. Don't get confused. Pay attention, everyone. In statement of accounts and solvency, I'm just talking about what we have done throughout the year. What are our accounts and are we solvent or not? In annual returns, I'm talking way more than that. Who's the designated partner? Is he a designated partner in 1,000 things and all of that? All right. So this is about your annual return. Finally, winding up. Start.
Winding up of an LLP.
Definition. The winding up of a LLP may be either voluntary or by the tribunal and LLP. So wound up may be dissolved. Circumstances in which LLP may be wound up by tribunal, section 64. A LLP may be wound up by the tribunal. A. If the LLP decides that LLP would be wound up by the tribunal, if for a period of more than 6 months, the number of partners of LLP is reduced below 2. If the LLP is unable to pay its debts, if the LLP has acted against the interest of this
Sovereignty and integrity.
integrity of India, the security of the state or public order. The LLP has made a default in filing with the registrar the statement of account and solvency or annual return for any 5 consecutive financial year, or if the tribunal is the opinion that it is the just and equitable that the LLP would be owned up.
Insist you to keep your cameras on and listen to me very carefully. 6 out of 8 attempts, there have been questions on winding up of LLP. 6 out of 8 attempts, there have been questions from winding up of LLP. All right. Very, very, very important question, Jivita. All right. So this topic is extremely critical. Please make a note of it. Winding up of LLP, very, very important, and the reasons where the winding up can be enacted. The last topic is discussion between comparison between LLP and partnership firm. And after this, you have a couple of topics revolving around differences between LLP and limited liability company. With this, we come to an end of LLP. We're left with 2 chapters now. All right. The first one is FEMA. The other one is going to be your companies incorporated outside India. All right. So let's quickly discuss about that. Audit and auditors, what I will do is, we will separately go through after share capital. I will dedicate 1 hour to take you through complete audit and auditors. Clear, everyone? All right. So meanwhile, what we'll do is we'll go through companies incorporated outside India as a topic. Is the screen visible to everyone?
No, sir.
No, sir.
No, sir.
Is it visible now?
Yes.
Yes,
Yes.
sir.
So very important, listen to me very carefully. Again, companies incorporated outside India, it's a cakewalk chapter and there cannot be a question paper without question from here. I repeat, it's a simple chapter, Shreya, Sharon, there in the session. All right. And there cannot be a question paper without question from here. Pay attention on this topic while you're preparing for your exams. So what exactly are we talking about here? Topics which we cover are: what is this act? When is it applicable? What is a foreign company? What documents have to be kept? What is the account and date of registration of prospectus? So what is a foreign company? Under section 2 clause 42, foreign company means a company which is incorporated outside India, which has a place of business in India, very, very important, conducts any business activity in India. If you stop at place of business in India, your answer is incomplete. Sri Charan, there in the session. So in case of LLP, in case of foreign company, you have to ensure 2 conditions satisfied. All right. First one, place of business is in India and conducting business activity in India. If these 2 are not written, your answer is wrong. So what is a foreign company? Foreign company is a company which is incorporated outside India and has a place of business in India and conducts business activity in India. Whether it is through physically, whether it is through an agent, whether it is an electronic mode or not, all of that has to be captured accordingly. All right. Then we went on to understand what do you mean by electronic mode? How are you going to sell? Please note. So this time I'm expecting a question where they'll give you a case study telling that Mr. X is selling the goods through an online platform which is registered outside India. The company itself is registered outside India. Comment if this can be considered as a foreign company under section 2 clause 42 or not. You will have to go through what is electronic mode. So pay attention. One of you quickly read electronic mode. Start.
Electronic mode means carrying out following activities electronically: business to business, B2B, and business to consumer transactions, data interchange, and other digital supply transactions. Offer to accept deposit or accept a deposit or subscription of securities in India or from citizen of India. Financial settlements, web-based marketing, advisory and transactional services, database service and products, supplies chain management, online services such as telemarketing, telecommunicating, telemedicine, education, and information research, and all related to data communication services, whether conducted by email, mobile devices, social media, cloud computing, document management, voice or data transmission, or otherwise. Place of business includes a share transfer office or shared registration office. Mere holding of board meetings and executive business decisions in India cannot be termed as conducting business activity in India. If services are provided electronically, location of main server is immaterial. Example, if main server is located in Dubai and cloud computing services offered to clients in India, it constitutes business activity in India.
I hope I'm clear. All right, it constitutes business activity in India. Where are the questions I'm expecting? Place of transfer. So they'll tell there is a share transfer office in India, whether it can be considered as electronic mode or whether it can be considered as a place of business. Second, they will ask, we are holding the board meetings and taking all the material decisions in India. Can I say it is going to be considered as business activity being carried out in India? Third scenario, where server is outside India, but all the activities are conducted in India from India on those servers. Is it considered as electronic mode or not? I want you to be aware of what is electronic mode. Write down, open your books, quick. Quick. Ready? Write down. Write down. First point. Important topics from companies incorporated outside India. Definition of foreign company. Definition of foreign company. Second, place of business through electronic mode. Place of business through electronic mode. All right. Now, next topic, whether it is applicable to the foreign companies or not. Section 380 to 386, 392 and 393 shall apply to all the foreign companies where not less than 50% of their paid-up capital is held by an Indian person, Indian citizen or an Indian company. Then the provision of the Companies Act will apply to them as if it was incorporated in India itself. Very important topic. Very important topic. All right, write down. Question. XYZ Private Limited. XYZ Private Limited incorporated in UK. For those of you thinking, sir, UK also has private limited, don't forget, we are a subset of, we were colonials of Britishers. All right. UK also has limited and private limited itself. Write down. Full stop. 99% of the company is owned by Madhuri, who has never left Bangalore. Full stop. Born and brought up here and an Indian citizen. She's saying no. Which part of Africa are you from?
From Andhra.
From Andhra. All right. I'm sorry. You write Andhra. Let everybody else write Bangalore. All right. So in this scenario, comment. If the company is a foreign company, since it is incorporated outside India, comma, conducting business activity in India and has a place of business in India. One of you read sub-rule 2. Quick. One of you read section 379 actually is talking about it. Read subsection 2. Anyone?
Not less than 50% of the paid-up share capital, whether equity or preference, or partly equity and partly preference of a foreign company is held by one or more citizens of India, or by one or more companies or bodies incorporated in India, or by one or more citizens of India and one or more companies or bodies incorporated in India. Whether singly or in aggregate, such a company shall comply with the provisions of this chapter and such other provisions of the Act as may be prescribed with regard to the business carried on by it in India as if it were a company incorporated in India.
So what are we telling? For whatever business you're carrying on in India, You behave as if you are an Indian company itself. I'm not saying a UK-based company, I'm calling it as an Indian company. No, that's not what I'm saying. It is a foreign company. It will continue being a foreign company. But for the purposes of this section and other laws in this act, I will assume you to be as if you are incorporated in India. Clear, everyone? And is it everything? Answer is no. I am not calling their global business to be an Indian business. No. I am calling only to the extent what you're doing in India will be considered as an Indian company. Crystal clear with the concept, everyone. Those of you are sleeping, I hope you wake up, all right, at the earliest possible, because you will be missing out on a couple of topics going forward. Next, documents that they have to maintain. Please ensure whatever documentation has been mentioned under section 380 has to be filed with the registrar. One very important form is called as form FC1, which has to be delivered to the registrar within 30 days. All right. Next topic is on changes. Whenever there are any changes, you have to file FC2 with the registrar in terms of whatever kind of changes can come in. It can be in terms of business, it can be in terms of directors, it can be in terms of any of the places of operations, whatever business activities, everything has to be mentioned. Foreign name or every company, whichever is a foreign company which is having a place of business in India, shall specifically mention that it is from which country it is incorporated, or else Indians will assume it is a company which is incorporated in India. Apart from that, you have to also mention whichever letter, billhead, letter papers, whatever notices you get, everything should have the name and also categorically mention that you are incorporated in which country. Next, service on foreign company. In case if somebody wants to, if any of the authorities want to go ahead and service a document on the foreign company, if it is addressed to any person in India, and if you've sent it to that person and an electronic mode has been sent, all right, even if you send it through an email, that should be sufficient. It is as good as a service of the foreign company. All right. Debentures, annual return, registration charges, books of account, and their inspection for the purpose of this business. Whatever is applicable to an Indian company will apply as if to the foreign company as well, as if it was an Indian company itself. Very important. Foreign company FC4 has to be filed within 60 days from the end of the financial year to the registrar. Do they have to maintain books of account? Answer is yes. Do they have the registration of chances? Answer is yes. Inspection and investigation, if somebody wants to carry out against those companies, can they, foreign companies, can they carry out? Answer is yes. Do they have to get an audit and auditors? Answer is yes. Please note, in auditing, there can be a question. Foreign company having a place of business in India and so. Indirectly, their question is whether should I get audit of the foreign company as well? Answer is yes. Clear, everyone? Next, prospectus by the foreign company. Can a foreign company go ahead and issue prospectus in India? The answer is yes, provided they talk about what is the Constitution of India, all right, or Constitution of the company, act under which it is incorporated. If your document is not in English, get it translated, but it has to be a certified translation. Address in India in case if somebody wants to inspect, date and incorporation of country. Address of the principal place in India. Any other documents which have been mentioned in section 26, all of these have to be complied. Only then it can go ahead and issue prospectus. First 4 points shall not apply if issued more than 2 years after the date in which the company is entitled to business. So what are the first 2 points? First point is on instrument, act. Instrument is not in English, then you have to translate it, and address in which. All right. This point, though they are saying it is not applicable, however, 100% if it is in French, Spanish, how will you read it? It has to be translated. All right. So that will continue as is. Prospectus, again, this has to be dated and filed with the registrar. It has to be approved by the managing body, and it has to be signed by chairperson and 2 directors. Very important, whatever is there in the prospectus that we have learned, an expert opinion, contract of appointing of the managing director, material contracts that you have entered into, underwriting agreements, power of attorney, all of these have to be included along with your prospectus. 387 does not allow a foreign company, or section 387 is not applicable when the foreign company is making a right offer to its existing shareholders. What is the meaning of this? You don't have to give a detailed prospectus if you're giving a right offer, right issue to your existing shareholders itself. I have no problem at all. 387 shall not apply for issue of the prospectus with respect of those shares which are already listed on the stock market. If you see, these two are the same exception where you don't have to issue a prospectus even under the normal provisions. Clear, everyone? Understood? Can I continue? Yes.
Yes, sir.
Next thing. All right. Application of the documents according to rule registration of foreign company rules. All the documents shall be in English language, and if it is not in English language, then you have to translate it. All right. whatever you're going to file, it has to be authenticated by an advocate, attorney, or pleader who can appear before the High Court. Why? Because you translate, how will I know what you've translated is right or not? So it has to be authenticated. Very important. An affidavit of a person who understands that language has also given this when he is translating it to English. All right. Next thing, punishment. If you contravene any of the provisions of this act, the company will be punishable, as well as the officer will also be punishable with a fine. Section 393 talks about company failing to, which is not able to comply with the provisions of this act. However, their contracts will not be invalidated. Very important. What does this section say? Though you have not complied with the provisions of this act, can I say that whatever contracts you've entered is also invalid? Law says that I cannot touch because that is coming under the Indian Contract Act. That is not coming under the Companies Act. So that will continue as is. With this, your whole concept on foreign company is also done. 3 chapters done now, or rather 4. How many done? How many done? Dividend done, accounts done, LLP done, and now we are done with your companies incorporated outside India. Ready for the next chapter?
Yes.
Yes.
The pop
Yes.
of all topics. Fema, can I begin? Yes.
Yes.
Yes, sir. Yes, sir.
You know if the screen is visible to everyone. First thing, before I start FEMA, how many times are you going to read FEMA as a chapter? Before your examination, you have to read in such a way that you get nightmares of FEMA. You get dreams of FEMA. I want each one of you to dream of FEMA. I know it's very, very stupid and does not make sense to most of us, but guys, trust me, FEMA is important. But is it high funda? Answer is no. We have seen the entire chapter and it is just an unnecessary hype which is created of the topic because foreign exchange is added to it. And you have created this hype. The topic is important from examination perspective does not mean that it is hype. All right. Or is it difficult? Simple chapter. Let's go ahead, spend some time and understand the concepts. Can I begin? Yes.
Yes, sir.
Yes, sir.
Hope the screen is visible to everyone.
Yes.
Yes,
Yes.
sir.
Yes. All right. So Foreign Exchange Management Act 1999. To whom is it applicable? That is the first question. All right. Let us quickly get into the applicability. This is applicable to the whole of India. This is applicable to all the branches which are outside India but controlled by a person resident in India. This is applicable to all those persons who are outside India or person which is not resident in India but are operating in Indian soil. In detail, this will make sense when we go to the residential status. All right. So this is about your applicability. I hope the screen is visible to everyone. Yes.
Yes.
Yes, sir.
Now,
Yes, sir.
going ahead, a couple of important definitions. There are 2 types of transactions. One is called as capital account transaction. The other one is called as current account transaction. All right. You have to know the definition of both of these. What are capital account transactions? Those transactions which alters your assets or liabilities, which alters your contingent liability, whether in India or outside India, I don't care. All right. Such transactions are called as capital account transactions. What are current account transactions? All those transactions other than capital account transactions are current account transactions, but it also includes the following. You will have to remember this. What is it? Payments which are made for foreign trade, payments which are made for the interest, remittances for living expenses of parents, spouse, children residing outside India, and expenses incurred in foreign travels, education, medical care. All of these are within the definition of your current account transaction. Rest of the definitions you can look into. What is more important for me is the definition of the word person. Read, one of you.
Person.
Oh, wait. I want all the cameras on. If you cannot turn on your cameras, please quit the meeting. It's absolutely fine. All right, start.
Person includes individual, a Hindu undivided family, a company, a firm, an association of person or body of individual, whether incorporated or not, any agency, office or branch owned or controlled by such persons, even artificial judicial person not falling within the definitions has been treated as person.
If you see, definition is similar to what you come across in income tax. All right, definition is similar to income tax. What is more critical is the whole definition which is revolving around person resident in India. All right, so let's understand this first. Person resident in India means a person residing in India for more than 182 days in the preceding financial year. This person is a person residing in India, but does not include the following categories. Now, who are they? That means any person who's gone out of India for the purpose of employment, for any other business or vocation, for any other purpose where it appears that he will not come back. All right, where he is not going to, where with an intention to stay outside India for an uncertain period, this person will not be considered as a person resident in India. Second person who has come to India, but for what? For anything other than employment, for carrying on any business or for any other purpose where it indicates that he has an intention to stay in India for any uncertain period. If you see, this is exactly the flip of the first one. Here, an Indian person is leaving India for these three things. Here, an outsider is coming to India for these three things. Then, in that case, if he is coming for anything other than these three things, he is not a person resident in India. If he is leaving for these three things, he is not a person resident in India. Complete Chitrana if you don't pay attention. Everybody's understood?
Yes.
Yes.
Everybody's understood? All right. Surprising. Coming back to the next point. All right. Who else is a person resident in India? Person which is incorporated in India is a person in India. Any branch which is owned or controlled by a person outside India. All right. If a person resident outside India, but the agency or branch or office is in India, then it is a person resident in India. Any branch which is outside India, but controlled by a person resident in India will also be considered as a person resident in India. Close your eyes and sit straight. Any person who's staying in India, who's residing in India for more than 182 days in the immediately preceding financial year will be considered as a person resident in India. But it does not include first category, a person who is leaving India for any of the three purposes. Second category, any person who's coming to India for anything other than those three purposes. These people are called as person resident in India. Next, any company, body corporate, which is incorporated in India. Fourth, any office, branch, or agency which is in India. Whoever owns it, I don't care whether it is owned by a person resident in India or outside India. I don't care if you're on Indian soil, you will be considered as a person resident in India. The last category, if you are residing outside India, if your office, branch, or agency is outside India, but controlled by a person resident in India, you are a person resident in India. Clear?
Yes, sir.
Yes, sir.
I am confident that each one of you sitting here remembers the definition really well, because we have seen this definition from all possible angles. We have dissected it to remember it well. Clear? Can we continue, everyone?
Yes.
All right.
Yes,
So
sir.
this is about your definition on resident. The next thing is couple of issues. All of these we've discussed. All right. You will have to spend some time. Person resident outside India means a person who is not a person resident in India. Coming to residential status, I've already spent enough time on this. What is more important for us is to understand what are current account transactions, what is a person resident in India, what is a person of Indian origin, and a couple of things. All right. Who is a person of Indian origin? Any person who is a citizen of any country other than Pakistan and Bangladesh, but he has an Indian passport. His grandparents or parents are from India or are citizens of India, or his spouse is an Indian citizen, then that person will be called as a person of Indian origin. All right. There are a couple of restrictions which are coming under section 3. Then you have a few, listen to me very carefully. Then you have section 4, which is talking about holding of forex. We will see all of these, don't worry. Section 6 is talking about capital account transaction. Section 6 also has a certain transaction which are permissible, certain transactions which are permissible outside India, couple of transactions which are clearly prohibited, and this leaves us with the last topic on current account transaction. What are current account transactions? This is also categorized under 3 buckets. One which is clearly prohibited, one which is allowed with the prior approval of central government, and one which is allowed with the prior approval of Reserve Bank of India. Let's spend some time on understanding these topics and then we wrap up for the day. All right. Is the screen visible, everyone?
Yes, sir.
Yes, sir.
Quickly get started. The first one is on restriction of forex and foreign security. That means there are a few restrictions. Unless and until you're an authorized person, you cannot enter into forex transactions. All right. No person shall make any payment to a person resident outside India in any manner. There's a restriction. All right. No person shall receive from any person other than authorized person any amount from a person resident outside India. Whatever transactions you enter in India as consideration for acquisition or creation of assets, any asset outside India, it has to be authorized. Only then you can continue, or else you cannot. Holding of forex, except if provided in this section, no person shall acquire, hold, own, possess, transfer any foreign exchange, foreign security, or any immovable property outside India. Very, very clear. You cannot hold foreign exchange. You cannot transfer any of the instruments. You cannot go ahead and have any immovable property outside India if not provided under this law. Forex transactions are of two types: capital account transaction, current account transaction. What are current account transactions other than capital account transaction? What are capital account transactions? Something which alters the assets or liabilities, or something which is including your capital contingent liabilities, or something which is of an Indian person outside India. All right, which alters all the assets and liabilities of a person will be considered as a capital account transaction. We went on to understand what exactly do you mean and what all could be covered under capital account transaction. All right. So there is an exhaustive list which is provided on what all can be covered under capital account transaction. These transactions are split into three categories. The first category, where you can freely transfer. All right. There are no restrictions. Second category, it is allowed only to a person resident in India and person resident outside India. What all are allowed is covered. The third category is strictly prohibited. You cannot go ahead and do so. Transaction on which restrictions cannot be imposed. I cannot impose any restriction. What are the transactions? If a person resident in India is going ahead and transferring any immovable property outside India, first of all, it should not have been allowed, but it is being allowed. That means no restriction is imposed on this. When? If that property is an ancestral property which you have inherited from a person resident outside India. Simple as that. All right. Let's take a simple example. Chitralekha, Mamta there in the session. Chitralekha wants to go ahead and sell a property in Africa. Can she do this? General piece of law? No. Is there an exception? Answer is yes. Provided this has been, no restrictions can be imposed if this has been inherited from a person resident outside India. Simple as that. All right. Similarly, any person who is resident outside India, general piece of law, he cannot buy a property in India. Only exception is if he has inherited this from a person resident in India, then he can go ahead and do so. Clear, everyone? All right. These are the restrictions which can be imposed. Now, what are the capital account transactions on which are permissible? Example, investment in foreign securities, foreign currency loans, transfer of immovable property outside India, guarantees, all of these are permissible. All right, it is allowed. Next, list of permissible transaction of a person resident outside India. These are a person resident in India. All right, now we are talking about person resident outside India. Is the screen visible to everyone?
Yes,
Yes,
sir.
Investment in India, acquisition of immovable property in India, guarantees, import, export, deposits, foreign currency accounts, remittances outside India for those assets which are outside India, undertaking derivative contracts. All of these are allowed for a person resident outside India as well. What are prohibited? I want you to remember the prohibited. What are prohibited? No person resident outside India shall make investment in India in the company in any form if that business is in the business of chit funds, nidhi, agriculture, real estate, and TDRs. Not allowed. All right. Next, what is current account transaction? Those transactions other than capital account transactions are considered as current account transactions. Now, these are categorized under three buckets. The first one is transaction for which withdrawal is prohibited. Second one, where it is prior approval of central government. Third one is prior approval of Reserve Bank. What are prohibited is extremely important. Example, lottery winnings, racing, lottery tickets, or all of the banned prescribed magazines, football pools, commission on export made towards the equity investment in joint ventures, all right, payment of commission on export with rupee credit, all right. Next, remittance of dividend by any company to which the requirement of dividend balancing is applicable, callback services of telephones, Nepal and Bhutan, any transaction with a person who is resident in Nepal and Bhutan, any remittance of interest income on the funds held in Indian resident if it is a special rupee account. All of these not allowed to use Forex. Not allowed to use Forex. All right, you cannot use the foreign exchange for this. Next thing which you have to understand is those which are allowed with the central government approval, simple pointers, all right. Those things which are allowed, very important, with the prior approval of RBI. In this, I want you to remember with the prior approval of RBI, something called as LRS or Liberalized Remittance Scheme. Very, very important. Make a note of it. All right, make a note of it. Liberalized Remittance Scheme. Extremely important from examination perspective. Is the screen visible to everyone?
Yes, sir.
Yes, sir.
All right. So let's go back to the topic. So if you see, the topic that we were discussing is current account transaction with the approval of RBI. You don't have to go ahead and take up. Listen to me very carefully. Individuals can go ahead and avail Forex facilities up to a limit of $250,000. All right. LRS is available up to $250,000. Any additional remittances for which you will have to go ahead and take prior approval of RBI. LRS means you don't have to take any approvals. All right. You don't have to take approvals for LRS. Beyond 250,000, you will have to take LRS approvals. All right. Or you will have to take approvals because it is going beyond LRS. What is more important is those facilities which are available for persons other than individuals. That means individuals cannot do these things. What are those things? Donations, commissions, remittances which are exceeding 10 lakh for the projects. All right. So these projects we have categorized here. What kind of project is this? Whether it is a consultancy project for infrastructure, for other than infrastructure. How much is the amount involved and whether RBI approvals are there or not. All right. Then you have something called as EEFC account. What is this EEFC account? If you're remitting money out of your EEFC or a foreign currency account, nobody can stop you, because first of all, it is foreign currency. You've received it in foreign currency. You want to spend it in foreign currency. No prior approvals are required. However, if you're using it for any of these three things, say membership of PNI club, for commissions, for going ahead and giving any of the remittances, in this case, for investment which is beyond 5%, in this case, you will have to take the approvals. Last thing is on exemption for payment made by international credit cards. If it is a current account transaction, it is not specifically restricted, then it is freely permitted. If it is a capital account transaction, if it is not specifically permitted, then it is prior approval is required. This is about your international credit cards. With this, we wrap up FEMA as well. All right. FEMA appears to be big. It is not. It's a simple chapter. It's just that you will have to read this again and again. Close all your books and listen to me now. The only two chapters left, audit and auditors, and the last one is your share capital. Share capital we haven't done yet. Audit and auditors we have finished, but I would want to spend decent amount of time, so I'm not going to cover it right now. All right. What is now the whole thing about your examination, sir? How to read, how to write? Let's read. Law requires multiple revisions. I'm not sure how many of you have observed till date. I wouldn't have started a session without revision. And this is not just for you. I do this at CA Foundation. I used to do this for auditing at CA Final as well. All right. This is nothing new. I have done all through, and it is required. Theory requires seeing it again and again. Conceptual clarity is good, but writing the law as is important. Sir, how to write is the question now. There are two types of question in your examination. Rather, I would say three types. One is MCQ, where you don't have to use your brains. Second one is going to be case study questions. Case study, it's a simple format that each one of us know. All right, it has to be in a particular pattern. Facts of the case, provision of law, analysis, conclusion. If it is a direct question where they are not asking any numerical, there is no case study, it's a straight question, how do we answer? Please note, in these kind of questions, it would be preferable first thing to write in pointers. Second thing, section numbers have to be quoted as is. There is no option at all. Third thing, See in case if you can add an introduction and a conclusion line to every such question. All right. Don't straight away jump into the answer. It will not make sense to the evaluator. See in case if you can give a introduction and see if you can add one sentence of conclusion at least. Making sense, everyone? Understanding? Now coming to the next point. Sir, all said and done, we're just not able to read. This, I don't have a solution. All right. If you're not able to read, I can't tell, please read. That's what you're not able to. All right. My only thought process is at times fear acts as a bigger motivation than positive. All right. Or than all the positive thoughts. Ask yourself, if you don't clear, what are you going to do? Stuck at intermediate forever? Big question mark. All right. Now, I think after listening to this, at least you should get a push and shut up and open your books. I am not for 1% doubting any of your caliber. But if you're not able to open the books itself, that means you're having a headweight. You have that major confidence issue where you're thinking that I will sail through one day paper exam. You will not. You will not. I've been teaching law paper for almost 7 years now. Even today, if I have to teach, I prepare and come. By now, you should have realized there is a presentation in place. There is a note. I show all the possible newspaper clippings. I show you all the annual reports. This will not happen instantly. This happens with prior preparation. I'm not sure how many of you are able to make sense of it. All right. My point is very simple. If you think you will clear, I'm telling you, good to hear. But without efforts, if you think you will clear, I'm telling you, you will not. If you get stuck at inter, you're stuck forever. Because pushing yourself a little hard every day is difficult. Your peers are already finishing their articleship by the time you finish your inter exams. We are not in a race. All of that is good to hear, good to convince each other. But am I for 1% saying that it is possible and going to live forever like this? Answer is no. I am telling you, law paper is one of the papers where people have lost majorly last time. I have seen answer scripts, the brightest of brightest students whom I wouldn't have ever given up on were not able to clear the paper. If they've put in efforts and not able to clear, they can at least see their own face in the mirror. Not putting in efforts, and if you don't clear, and if you think, okay, chalta hai, trust me, this chalta hai attitude forever is going to be a concern for you. High time, please pull up your socks. Do it for yourself, not for me, not for Shetty sir, not for your parents. Nobody, do it for yourself. Articleship competition is extremely high. A lot of chartered accountants are getting replaced by AI. I take interviews day in and out. If I get a CV of a person with 3 attempts and if I get a CV of a person with 1 attempt, you ask yourself, what would you do if you were in my place? You ask yourself and justify yourself, whatever it is. All right. I don't want to listen to it. All right. For me, it's a straight, simple gate pass. Your first attempt marks is going to be your gate pass. If this immediate attempt itself is your second or third attempt, then stop cursing yourself. Relax. This can be the best attempt, get a rank. But after this also, if you have aims of writing a few more attempts, then God save you. I believe in the fact that a blind person can go ahead and get a presidential award. Imagine his vision. Probably we are blind and not the person. That we can't see where we can reach, and that person can see way more than what others could have seen in him. All right. So my suggestion to each one of you to please pull up your socks. It's high time and do something for yourself, for nobody else. All right. With this, I think I am done. Shetty sir.
Hi sir. Namaste. How are you, sir?
I'm good, sir. How are you, sir?
Oh, good, great. Nice seeing you after a long time.
Just rush, sir. Yes.
Yes, sir. क्या चल रहा है? Talk चल रहा है?
बहुत कुछ चल रहा है सर.
बहुत कुछ चल रहा है.
बहुत
Okay.
कुछ चल रहा है.
Yes, sir. Yes, sir. Okay, nice. So without your permission, I heard your last couple of sentences, sir, and I totally watch for what Mehul sir has said. So earlier, auditing was the area of concern, but of late, no doubt, foundation is always a concern because people do not have the writing skills, sir, not because of any other reason. Intermediate, unfortunately, last couple of earlier law was never an issue, but last couple of exams across India, not just at local. So across India, people are struggling. So please understand what he is trying to stress upon. Okay. So write, reproduce, rewrite, and redo. So that if you do not have a recollection capacity of a theory paper, it is a waste knowledge what you acquired. Acquisition is waste if you cannot recollect and reproduce. So yes, sir. Thank you, sir. Or
Bas, all good, sir.
all good, all good. I just
Yes,
have
sir.
some announcement about tomorrow's.
Sure, sir.
Yes, sir. That's easily.
I'll take your leave then, sir.
Yes, sir. I will be leaving in short minute. Yes, sir. Thank you, sir.
Done. Thank you so
Yes,
much, sir. Thank you, everyone.
Thank
Have a
you,
nice
sir.
Yes.
Thank
Thank
you,
you,
sir.
sir.
Bye, sir.
Bye. Yes, thank you, sir. So I hope all of you. Namaste. Hi, everyone. Long time no see. Hello, Idira.
Hello, sir.
But why you blocked me from entering the class, I don't know. Nevertheless, okay. So September 25 exam students don't have to listen to whatever I say, even though you may have to stay here. Point number one. So September 24 mid. Okay, so all of the students are suggested to attend the acupressure yoga session. So the reasons are plenty. I don't want to detailedly mention again the same. Stupidity on my part to come and ನಾನು ನಿಮಗೋಸ್ಕರ ಬಂದಿದ್ದೆ, ನನಗೇನು ಬೇರೆ ಬಿಸಿ ಶೆಡ್ಯೂಲ್ ಇದ್ದೆ, ಬಟ್ ನಿಮಗೆ ಅದು 2-3 ಸಲ ಹೇಳಿದ್ರೆ ತಲೆ ಒಳಗೆ ಹೋಗೋದಿಲ್ವಲ್ಲ ಒಂದು. ಸೊ September 25 exam students are exempted from attending unless you want to attend because there are 4 hours you want to relax. So mind ಬೇಕಾದ್ರೆ ಮಾಡಿ, ಬಟ್ September 25 ಪೀಪಲ್ಗೆ ಕಂಪಲ್ಸರಿ ಇಲ್ಲ ಒಂದು. Then all others are expected to attend tomorrow's and Friday's session, which is ನಿಮ್ಮ ಕ್ಲಾಸನ್ನು ಅಡ್ಜಸ್ಟ್ ಮಾಡಿ ಕ್ಯಾನ್ಸಲ್ ಮಾಡ್ಕೊಂಡು ಏನೋ ಮಾಡ್ತಾ ಇದ್ದೀವಿ. And it is strongly recommended that you attend. So you attended earlier once also, you can attend again. Force illa, but suggested that attend because ನಿಮ್ಮ ಫ್ರೆಂಡ್ಸೇ ಹೇಳಿದಾರೆ it is highly useful ಅಂತ. So if you do not have a health to enjoy the success, it is a waste life what you are carrying it. ಅದಕ್ಕೋಸ್ಕರ attend, and what you can foresee to spend lakhs together in the hospital. So you are just by spending 500 rupees, you are gaining the knowledge. They will also be giving you the PDF, etc. You can stay with your family members. ಯಾರ ಅಪ್ಪನ ಅಮ್ಮನ ಯಾರಾದ್ರೂ ಫ್ರೀ ಇದ್ದವ್ರು ಕೂತ್ಕೊಂಡು ಲರ್ನ್ PDF ಇರ್ತದೆ, ಅದನ್ನು ಸೇವ್ ಮಾಡಿಕೊಂಡು tomorrow small things instead of every time doctor throgo badalo, you can do it. So my suggestion that everybody should attend. I hope you understand. Yakana? So because we are all doing it for the Bharat, India and your health. ಅದನ್ನು ರೆಸ್ಪೆಕ್ಟ್ ಕೊಟ್ಟರೆ ವಿ ರೆಸ್ಪೆಕ್ಟ್. ಇಲ್ಲ ನಾನೇನು ಜಾಸ್ತಿ ಮಾಡೋಕ್ಕಲ್ಲ. ಫೌಂಡೇಶನ್ ಅವರಿಗೆ ಆಲ್ರೆಡಿ ಅನೌನ್ಸ್ ಮಾಡಿದ್ದೀನಿ. ಫೌಂಡೇಶನ್ ಸ್ಟೂಡೆಂಟ್ಸ್ಗೆ ನೀವು ಬಂದಿಲ್ಲ ಅಂದರೆ ಒಂದು 3 ಸಲ ಬರೀಬೇಕು, ಇವತ್ತಿನ ಕ್ಲಾಸ್ ಮತ್ತೆ ನೆಕ್ಸ್ಟ್ ಫ್ರೈಡೇ ಕ್ಲಾಸ್ ಅಂತ. ನಿಮ್ಮದು ನಾಳೆ ಡಿಸೈಡ್ ಮಾಡ್ತೀನಿ ನಾನು, ಆಯ್ತಾ? ಅದಕ್ಕೋಸ್ಕರ. ಸೊ ಬಟ್ ಏನು September 25 people don't bother unless you want to attend, that left your prerogative. But September 25 people ಬಿಟ್ಟು ಉಳಿದವರೆಲ್ಲ ಸ್ಟ್ರಾಂಗ್ಲಿ ರೆಕಮೆಂಡೆಡ್ that you should attend because it's happening at your home, at your convenience, and it is such a nominal fees, which is what you called allo, intermediate. I don't want to tell, but still I'm telling. You want to attend, but 500 rupees is a concern for you. 8312 message I will pay for you. Okay, should not be concerned at intermediate level, but still if there is a concern, yakandre you don't know the importance of that session. I don't say that adonu you learn ಮಾಡಿ tomorrow you have to use it anta. Okay, you should know smoking is not good for health. You should know drinking is not good for health. Have a knowledge. ಅದಕ್ಕೋಸ್ಕರ ಬನ್ನಿ. ಮತ್ತೆ ಲೇಟರ್ ಆನ್ ವಿತ್ ದ PDF ಎಟ್ಸೆಟ್ರಾ ಸೋ ಮೆನಿ ಪೀಪಲ್ ಸ್ಟಾರ್ಟೆಡ್ ಸೆಲ್ಫ್ ಟ್ರೀಟಿಂಗ್. ನೀವು ವಾಟ್ಸ್ಆ್ಯಪ್ ಯೂನಿವರ್ಸಿಟಿಯಲ್ಲೆಲ್ಲ ಯೂಸ್ ಮಾಡ್ತೀರಾ, ಅದರ ಬದಲು ಇದನ್ನು ಕರೆಕ್ಟಾಗಿ ಮಾಡಿ. ಬಿಕಾಸ್ ಅಂಡ್ ಸೊ ಅಟ್ ದ ಎಂಡ್ ಆಫ್ ದ ಫ್ರೈಡೆ ಸೆಷನ್ ಐ ರಿಕ್ವೆಸ್ಟ್, ಅದು ಬರ್ತಾ ಇತ್ತು ನನಗೆ ಅಲ್ಲಿ ಇಂಟರ್ವ್ಯೂ. ಸೊ ಸಮ್ ಕಾನ್ಸಂಟ್ರೇಷನ್ ರಿಲೇಟೆಡ್ ಐಸ್, ಈಗ ಮೊಬೈಲ್ ವಾಟ್ಸ್ಆ್ಯಪ್ ನೋಡ್ಕೊಂಡು ಐಸ್ ಎಲ್ಲ ಹೋಗಿರ್ತಲ್ಲ, ಅದಕ್ಕೆ ಐ ರಿಲೇಟೆಡ್ ಸೆಷನ್ ಮಾಡ್ತಾರೆ ಒಂದು. ಎರಡನೇದು ಗರ್ಲ್ಸ್ ಕ್ಯಾನ್ ಸ್ಟೇ ಬ್ಯಾಕ್ ಒಂದು ಲಾಸ್ಟ್ 5 to 10 minutes. If anybody has any girl has specific personal issues which you can may not be able to discuss, you can discuss with them because both lady teachers are there. They are very comfortable. Personal like stay back ಮಾಡ್ಬಿಟ್ಟು girls boys will be dropping. That also can be done on Friday. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಲ್ಲ? ಇಷ್ಟೆಲ್ಲ ಮಾಡಿದೀವಿ. So respect it and do it. Okay na? So but September 25 people relax. BCom exam I don't think you should consider because ದಿನ ಇರೋದಿಲ್ಲ BCom exam. So BCom ದಿನ exam ಇರೋದಿಲ್ಲ, ಅದಕ್ಕೆ I think I should not consider too much. ಎಸ್ ಜೀವಿತ ನಿಮ್ಮ ಮದರ್ ಇಸ್ ಟೆನ್ಸ್ ಲಾಟ್ ಶೆಟ್ಟಿ ಸರ್ ತಗೋತಾ ಇದಾರೆ ಅಂತ ಅವ್ರದ್ದು ಅವ್ರು ಲಾನಲ್ಲಿ ಇರ್ತಾರೆ ಲವಲ್ಲಿ ಇರ್ತಾರಲ್ಲ ಅಂತ ಹೇಳ್ಬಿಡು ಅವರಿಗೆ. ರೈಟ್. ನಮಸ್ಕಾರ ಮೇಡಮ್, ಚೆನ್ನಾಗಿದ್ದೀರಾ? ಮತ್ತೆ ಏನ್ ಸ್ಪೆಷಲು?
7:30ಗೆ ಆಗೋಯ್ತು, ನೆನಪಿಲ್ಲ.
ಏನ್ ತಿಂದಿದ್ದು ನೆನಪಿಲ್ವಾ?
ಆಗೋಗಿದೆ.
ಓಹ್ ದಟ್ ಇಸ್ ಆಸಮ್. ಇದು ಈ ತರ ಆದ್ರೆ ಒಳ್ಳೇದು ಮೇಡಮ್. ಇದಕ್ಕೆ ಹೌ ಟು ಫಾರ್ಗೆಟ್ ಅಂತ ನನಗೆ ಸ್ವಲ್ಪ ಟಿಪ್ಸ್ ಕೊಟ್ಬಿಡಿ.
ನೀವೇ ನೋಟ್ ಕೊಡ್ಬೇಕಿನ್ನ, ನೀವೇ ನೋಟ್ ಕೊಡ್ಬೇಕಿನ್ನ.
ಇಲ್ಲಿ ಖುಷಿ ಆಯ್ತು. ಓಕೆ, ಮತ್ತೆ ಆರಾಮ?
ಪಾಠ ಮಾಡ್ತಾ ಇರ್ತೀರಲ್ಲ,
ಹಾ
ಮಕ್ಳಿಗೆ ಭಯ ಬಂದ್ಬಿಡುತ್ತೆ. ಸೆಟ್ಟಿ ಸರ್ ಕ್ಲಾಸ್ ತಗೊಳ್ಳೇಬೇಕು, ಇಲ್ಲಾಂದ್ರೆ
ಅದೇ ಅಯ್ಯೋ ಅವ್ರ ಭಯ ಅಂತ ನಾಟಕ ಮಾಡ್ತಾರೆ. ನಮ್ಗೆ ಭಯ ಇದೆ ಅವ್ರದ್ದು. ನಮ್ಗೆ ಅವ್ರದ್ದು ಭಯ, ಅವ್ರು ನಾಟಕ ಮಾಡ್ತಾರೆ. ಇರ್ಲಿ ಖುಷಿ ಆಯ್ತು.
ಭಯಕ್ಕಿಂತ ಪ್ರೀತಿ ಅನ್ಬೋದು.
ಪ್ರೀತಿಯಿಂದ ಸ್ವಲ್ಪ ಭಯ ಇದ್ರೆ ಒಳ್ಳೇದು. ದಟ್ಸ್ ನೈಸ್.
ಇದೆ ಸರ್.
ಖುಷಿ ಆಯ್ತು ಮೇಡಮ್. ಥ್ಯಾಂಕ್ ಯು ಸೊ ಮಚ್. ಥ್ಯಾಂಕ್ ಯು. ರೈಟ್, ಅಷ್ಟೇ. ಸೊ ದಟ್ಸ್ ವಾಟ್ ಐ ಕೇಮ್. ಬಾಯ್ ಸ್ಟ್ರೇಂಜರ್, ಗಾಡ್ ಬ್ಲೆಸ್ ಯು. I'll meet you shortly. Thank you.
Thank you, sir.
Thank you, sir.
ಟೈಮ್ ಇಲ್ಲ ಮಾತಾಡಕ್ಕೆ, ಅರ್ಜೆಂಟ್ ಇದ್ರೆ ಮಾತ್ರ.
ಸರ್ ಅದು ನಾನು ಸೆಷನ್ ಆಗ್ಲೇ 3 ಸಲ ಅಟೆಂಡ್ ಮಾಡಿದ್ದೀನಿ.
ಅದೇ ನಾಟ್ ರಿಕ್ವೈರ್ಡ್. ಅಲ್ಲ 3 ಸಲ ಆದ್ರೆ ಬೇಡ. 3 ಸಲ ಆದ್ರೆ ಬೇಡ. ಇದು ರಿಯಲಿ ವಾಂಟೆಡ್ ನೋಡಿ, ಅದರ್ ಇಸ್ ನಾಟ್ ರಿಕ್ವೈರ್ಡ್. 3 ಸಲ ಆದ್ರೆ ಬೇಡ. ಬೇಡ.